Alrighty, guys, welcome to our Sunday weekly webinar. Thank you guys so much for being here. Today is Sunday, September 17th, 2017. Appreciate you guys being here. We're going to go ahead and jump right into things. I do notice there's an awful lot of new people in here. So just a quick little introduction about myself. My name is David Schinkel. I'm the CEO and founder of Positive Traders. I do this free Sunday webinar every single Sunday, usually around 8 p.m. Eastern time. Some Sundays I'm not able to, but for the most part, just about every single Sunday, I'm able to get on here and do a little market outlook for you guys. It is completely free. If you're able to make this one, but maybe not future ones, I do have a YouTube channel as well. If you just search Positive Traders in YouTube, you'll be able to find all of our recordings if you want to see any previous ones or watch any future ones that you aren't able to watch live. Other than that, if you guys like the content and you find some value out of this analysis, it makes you some money this week, definitely leave a like or a comment on our Facebook page, join our Facebook group. And then I have a premium group if you're interested in that, where I give out signals, have weekly webinars every single day. So the webinar that I do today is obviously for free for you guys. I do a daily webinar every single Monday, Tuesday, Wednesday, and Thursday for our premium members. A little bit similar to this, but a lot more in detail, a lot more educational. So this kind of gives you a little preview of what to expect if you are a premium member. Other than that, though, guys, let's go ahead and jump into it. Let's look at the economic calendar first for this week. It's pretty light throughout the week, minus Wednesday. We do have our FOMC meeting for the US dollar. So if you guys are not familiar with the FOMC meeting is, or what their federal funds rate decision is, this happens, they have this meeting 8 times a year. All right. And a lot more at the end of the year. So they're going to have one obviously on Wednesday. Then they have another one in November. And then they also have another one in December. So there's 3 that come towards the end of the year, a lot more. But basically what this decides, guys, is the interest rates in the U.S. All right, so they're going to decide if they're going to keep interest rates the same, if they're going to raise interest rates, or if they're going to decrease interest rates. Right now, the interest rate is between 1.00 and 1.25%, which is a little bit different. A lot of economies, a lot of central banks have a flat interest rate. So you'll actually see, like over here, you can see actually all the central bank rates if you guys use Forex Factory's economic calendar. But you'll see that for the U.S., it is the only one that's in between a certain number. So it has the less than sign. So it's actually between 1.0 and 1.25. If they raise interest rates, that means it's going to go from 1.25 to 1.5. And if they decrease interest rates, it's going to go from 0.75 to 1.0. You can see everybody else has pretty flat interest rates. But this is a very big piece of news for the week. You definitely should not be trading this. I'll let you guys know right now that if you are not aware, the US dollar makes up a little bit over 60% of the volume in the Forex markets. So pretty much what happens to the dollar, every other currency reacts to that in a positive or negative way. And so depending on what happens, this will definitely be a huge, huge market mover on Wednesday. So I recommend, taking a break from trading Wednesday, try to get some money made or some trades in on Monday or Tuesday or Thursday. I don't really like doing trading a whole lot on Sundays or Fridays, but that is that. We do have some Australian dollar news on Monday. We have some other USD news, some building permits on Tuesday. And then, we have our US dollar news on Wednesday. We have some pound retail sales. We are going to be talking about the pound, guys. I'm not super interested in trading any sort of pound crosses right now, just because last week we did have the year-over-year CPI come out for the pound. And we also had the interest rate decision for the pound. So very volatile past week for the pound. So I think we're going to let that cool off for a little bit. We also have some Japanese news, Bank of Japan press conference on Thursday. So it's tentative. So it's going to be sometime between 1 a.m. and 3 a.m. is what we know. And then we have unemployment claims Thursday and some more CAD news on Friday, some CPI and retail sales, and then some New Zealand dollar parliamentary elections. And that's going to be happening all day on Friday. So pretty, call it a kind of like a rainbow week for the markets. There's a lot of different currencies, a lot of news for a lot of different currencies. But definitely our key risk event for the week is going to be the federal funds rate on Wednesday. All right, guys, let's jump into your guys' favorite part, our technicals. So first, we're going to go ahead and look at gold. First and foremost, I actually do want to look at the dollar index, and I just want to let you guys know, if you had watched, good on you guys if you watched last week's webinar. So obviously last week opened up down here, and I did have a bias if you watched last Sunday's webinar about a pullback on the dollar, okay? Some temporary dollar strengthening, which we did see for Sunday, Monday, and Tuesday going into Wednesday. So analysis was definitely spot on, and other than that, Looking at gold, we did bounce off of the 1350 level last week. We talked about every $50 being a very psychological level for gold. So 1350, 1300, 1250. I definitely recommend like marking off the two closest $50 so you kind of have an idea. Just to show you how well it respects these $50 zones. I've showed this last week as well. When we broke through the 1300 level, when we bounced off of it, we went all the way up to 1350. And then on the daily, we got a nice bounce as resistance. So very strong level for gold, or very strong psychological levels of support and resistance for gold. So let's keep our I'm staying on the sidelines with gold right now. It does look pretty bearish. It does look like it could continue dropping a little bit. But one thing I do want to actually draw out and show you guys, I did this a little bit earlier, is I fibbed this out. I fibbed this ginormous swing out to kind of see what levels we have in play. So we've broken through the 23.6% retracement level with a pretty bearish engulfing candle that was created on Friday. And we are headed down to the 38.2% retracement level, which funny enough is that psychological level of support, which is the 1300 level. So some good confluence between both technical levels and psychological levels of support and resistance. Will it go down this far? Maybe not. I do think it may pull down a little bit further. Ultimately, though, I am looking for gold going higher. This is long-term analysis. So one thing I actually didn't get a chance to tell you guys before we started, there are a lot of new people watching this. My little disclaimer for all of my weekly webinars is my analysis, as you guys can tell, I'm working on the 4-hour time frame, the daily time frame. Sometimes we'll even look at the weekly time frame, but you don't really see me drop it down to the 1 hour or anything lower. So this all is higher time frame analysis, longer term analysis. So these setups that we talk about throughout going through these charts may or may not happen today. They might not happen tomorrow. It may just happen throughout this week. It may even take 2 weeks for these types of setups to form, because we don't know exactly what's going to happen in the markets, but this is our best guess. So definitely keep in mind, if I say, I'm looking at buying a pair potentially or selling a pair potentially, don't go like right after the webinar and sell the pair, buy the pair. Usually I'm looking for some sort of price action, some sort of structure in the market to confirm a buy or a sell to whichever direction, to the respective direction I'm wanting to trade. So that's my little disclaimer. So gold, just looking at some charts, we're going to look at some other charts too, obviously, but I think it could do a little bit of consolidation this week before ultimately going up higher. If it does end up, starting to drop, we will probably see it find some support at the 1300 level. I don't really see it going lower than the 1300 if it decided to continue to sell off, but some sort of bullish formation in this area. Maybe we'll see some sort of bullish, daily candle, bullish engulfing daily candle, or we'll see some sort of morning star, something that signifies the sellers slowing down. So I'm on the sidelines with gold right now, but I will be looking for maybe a little bit of a drop in gold before going up higher. Dollar index, if you guys do not use this or are not aware of what this is the dollar index. It's a index, so it's not a pair, but it does measure, in short, it measures the strength of the dollar. So all you need to really know looking at this is if it's going down, that's bad for the dollar. If it's going up, that is good for the dollar. I believe it's weighted against 8 different currencies, if I'm not mistaken. The euro making up over 50% of the weight on the index, and then all the other ones are like between 5 and 15% weight on each of them. But looking at the dollar index, guys, just from a technical standpoint, it is still very bearish, right? Okay, so we want to definitely address that. We are still in a very big downtrend, so we are not interested in buying the dollar. The only way we would be interested in buying the dollar is if it did pop above the 93.20 level and then make some sort of bounce, some sort of like flag or some sort of evidence for a bullish continuation, and that's the only way we would look at buying. So even though last week we did have some small trades in our premium group where we did take buys on the dollar, ultimately our long-term downtrend is to the downside, and or our long-term downtrend is still intact. Looking at it on the 4-hour, this trend line is not drawn on the 4-hour. So if you're looking at it and it's like, how does that make any sense? This is a trend line based on the daily. So we are back below this trend line that we did break out of last week. So we popped above it and then dropped back below. However, if we do see the way Friday's candle closed, there's a pretty big wick on this candle. So I wouldn't be surprised if maybe the bulls for the dollar came back. We would be looking at like this level as our next resistance, or even the underside of this weekly support. Some of you guys that are new, just to show you this 93.2 level, let's throw it on the weekly. And this is our weekly support that we broke. Okay, and so now it's acting as resistance if we get back to it. But if you guys have been following along with these weekly webinars for the past couple weeks, ever since we originally broke this level about 4 weeks ago, is when we kind of started having our, let's start to capitalize on the dollar sort of formation. So let's continue to capitalize on the weak dollar, but it is Sunday. It's not my favorite days to trade. I want to kind of see how the Sunday daily candle closes in about 21 hours or so, or 22 hours, or 21 hours. So keep in mind, guys, you don't have to make money every single day trading. It's very important to be patient and just kind of let the setups come to you, let the price action form and whatnot. So let's move on to Euro USD. I left this on here. I'm gonna actually delete this right now, but this is to give you guys an example. If you're wondering, what style of trading do I do? I'm a big fan of breakout trades, and I like buying, bull flags and selling bear flags and using pending orders above and below them. So this is actually a trade that we called on the premium group on Thursday going into Friday. So when price started to make this flag up here, and this is on the 1 hour, of course, because when I use the 1 hour to perfect my entries. So keep in mind, all of my analysis is done on the higher time frames. So let me just back up for a second to give you guys an idea, a little look inside my head. So on Thursday, so when there's 24 hours left until the market's closed, the Thursday candle going into Friday, this is how that Thursday candle closed. Okay, so this is Friday's candle that opened up. We saw some very strong, I actually posted this in both Telegram and Slack, that we saw this very strong resistance and this very strong support at this area right here, around the 118.90 level. And we were very interested in the way that the daily candle closed. The fact that it at one point was very bearish. At one point the candle was like this. It was this giant red candle. So it looked like the sellers were maybe picking up control, but we saw the buyers, say, no, we are still in this larger uptrend. So I was, that is kind of how I got into the bias of buying Euro USD and kind of formulating this trade, was seeing this on the daily. Now, I definitely was aware that if we look at this trend line right here, some of you guys might be asking, well, we're underneath that trend line. Yes, we are underneath the trend line, but I'm very, I recognize price action when I see it. So I was trying to capitalize on that. And so on the 4 hour, we kind of saw it pull back. You can see it on the 4 hour as well. If I back up just a little bit, you can see this level. You guys are more than welcome to write these levels down if you do have your trading journal out, and put these levels on these different time frames when we're done here. So the 118.84 level is pretty strong on the 4 hour and the daily. I just showed you guys on the daily, but on the 4 hour, we can see this resistance, this support. Yes, we do have a couple fake outs in here, right? We have a couple areas where price dropped below this to actually come down and test this trend line. But overall, we can see our main level of support on the structure is right there. And then we also saw some support from on Thursday going into Friday. So it's pretty simple to kind of perfect my entry. I went on to for this trade, some trades I don't even go lower than the 4 hour. On this trade, I just went to see, is there a bull flag or some sort of bullish formation that supports this bias to the upside. And we saw this nice bull flag. So we put a buy stop right above these highs if they broke, which it did on that candle right there. Had our stop loss just a little bit below the support of this bullish flag. And then we had our take profit. I believe this was just take profit 1. We did have a second take profit if this pair continues to go up higher. So this was just take profit 1. But even so, the secret, guys, with trading is making sure you get a good risk reward on your trades. You always want to make sure that, out of 10 trades, you average a 1 to 2 risk reward or better. You don't want to be risking, in this case, you can see we risk 23 pips to make 51 pips for our first take profit level. But you always want to be risking, we didn't risk 23 pips to make 15 pips. We didn't even risk 23 pips to make 23 pips. We risked 23 pips to make 51 pips. And so that's really the key, is making sure you have a good risk to reward on your trades. So that take profit 1 level did get hit. Now, looking at the actual going into this week of what could happen, we just talked about the dollar index, which if you don't notice, the dollar index does the exact opposite of Euro USD. They both do the opposite of each other. They have a 99% correlation. So if you actually flip between the two charts, you'll notice that they are literally the exact same opposite charts. The candles almost look exactly the same. And It's not like other pairs where they, sometimes correlate positively or negatively to each other and then sometimes don't. I did drop a correlation chart in Telegram for you guys. So if you missed that, scroll up a few messages. I dropped it on, I think, Thursday going into Friday. But it talks about the different correlations between all these pairs that I trade. But the strongest correlation by far is the dollar index to the Euro USD. They have a negative 99% correlation. So that means 99% of the time they are doing the same thing negatively. So when one goes up, the other goes down. So I am recognizing on Friday, kind of like how the Thursday candle that made us look for a sell, we had a big wick on the bottom side. We do have a big wick to the upside. However, the pressure is still, to the upside on this pair. It is still on a weaker dollar. So overall this week, I am biased to this pair moving up higher. I do think we're going to come back up to the 120 region at some point this week. But to me, with seeing that there's FOMC in my experience of being in the market for multiple years, usually before the federal funds rate decision, before there's going to be such a big thing in the markets, you usually see some sort of consolidation. So I wouldn't be surprised if the market's kind of consolidated, maybe even dropped a little bit, maybe back down to this support level around the 118.88, but ultimately moving up higher, kind of like gold, right? Gold and Euro USD have a positive correlation to each other. So watch these pairs this week, but I am overall, I think that we're going to close Friday higher than we're opening on today on Sunday. So overall bullish, but I think there could be a little bit of consolidation before moving up. We could see something like this happen. Maybe it come back down to the 118.80 level and then continue moving up higher. But I will go ahead and delete this since that trade is already done. Let's go ahead and look at USD Swiss franc. USD Swiss franc offered some really nice price action on Thursday as well. If you guys caught this move to the downside, awesome. There's this beautiful, beautiful exhaustion candle, and then it did drop for a little bit. So there was definitely a good opportunity to capitalize on USD Swiss franc. Ultimately, just like it does the opposite of Euro USD, I think ultimately throughout the week, we will see this pair go lower. We may not see new highs on Euro USD this week, and we may not see new lows on USD Swiss franc. We may see it, consolidate and move lower, but I think ultimately our move is lower. It is Sunday though. We may see it, pop back up to this kind of like this zone again, retest this area and then continue dropping lower. But overall, my bias is to the downside on this pair and bias to the upside on Euro USD. Let's look at pound dollar. All right. So the pound pairs, the pound crosses, guys, I briefly talked about this when we were going through the economic calendar, but last week we saw two very high impact news for the pound. We saw, among other things, there were lots of news for the pound last week, but the two most notable was we saw year over year CPI. So it wasn't just a month over month measurement or even a quarter over quarter measurement. It was a year over year report that was very good for the pound. And that's why we saw these pairs sailing. And then, or like the pound USD and pound yen. But then we also, to add to that, we did see the interest rate decision for the pound where they decided to keep it the same, but they had an overall hawkish, which is a positive outlook on the pound. So we saw just the pound yen, I'll come back to the pound dollar, but I just want to talk about the pound yen very quickly. Guys, we basically made history last week. If you notice, look at the size of this weekly candle. Okay, we moved over 800 pips on pound yen last week from start to end. And our bias was definitely to the right side. I want to definitely address that, is that we had our bias last week that we talked about on last Sunday's webinar was this very nice inverted head and shoulders. All right. So we see our left shoulder, our head, and our right shoulder. And we actually did see the neckline broken. So last week when we started the webinar, I said once this neckline is broken, if and when situation, guys, definitely, it could have came up to this neckline and bounced and never completed this formation. That's something that you guys definitely understand. I see a lot of traders. I said this last week, but I'll say it again. I see a lot of traders on social media, or people, that claim to be traders, that they are always taking positions at the right shoulder, whether that's a normal head and shoulders where they're saying to sell at the top, or an inverted where they're saying to buy. Guys, do not run away if you see somebody telling you to do that. Yes, there is a very high probability that the formation will complete, but a true head and shoulders, the true proper way to trade a head and shoulders is you wait for the neckline to break. So in an inverted head and shoulder, we can see that right here. And if we had a normal head and shoulder, That would be, once the right shoulder completes and breaks. And ideally, you're looking usually for some sort of consolidation on the break for like a bear flag or a bull flag, and then moving lower or higher, or a break and then a bounce and then moving. We did not see a break on the pound yen. That is one reason why this wasn't a signal that was given out in the premium group, is because we didn't see the 4-hour come up and drop. It just absolutely skyrocketed. And then by the time it got up to this area, it was so close to this resistance and so close to the CPI that we ended up waiting to see what happens. We didn't take a whole lot of trades in the premium group last week, but all of them that we did take all went into profit. It's actually now, we're going on our 5th week now. If we can finish this week without any losing trades, that'll make 5 weeks without any losing trades. Right now, we're at 4 weeks in a row without any losing trades. Got to let the trade setup complete before entering. Yeah, okay, you guys are just chatting about the trade. Awesome, Amir. You caught 1,000 pips on this. Great job. This was definitely a textbook setup, but I don't like to trade the news, so I was a little bit apprehensive about trading this, and I still am going to stay on the sidelines with pound yen and pound dollar. Okay, guys? I do think that of course, a weak dollar is a strong gold and a strong yen and a weak dollar. So that would give way to higher highs with pound dollar if we continue to see a weaker dollar, and that would also give ways to higher highs with a pound yen, or with the pound yen. So it would actually be to the downside if we saw a strengthening in the yen, but with just the pound news and I meant the buying pressure in the pound right now, there is still a lot of buying pressure on the pound, and I'm just not interested. I think that there are still higher levels to go, but you guys can see, check this out. This over here all the way to the left is Brexit. So it's almost like on pound yen and pound dollar. Pound dollar is a little bit lower, but on pound yen, it's almost like Brexit never even happened. The Brexit decision almost never even happened, because this was the beginning of Brexit. So it's really, in terms of pound yen and how many pips it moves on a regular basis, it's not very far from where we saw Brexit happen. So it's pretty interesting, and that's the reason why I said we're making history. And the other reason I said we're making history is because if you guys look at this weekly candle on pound yen, and then you go back, you look at the weekly chart and you go back and you try to find a bullish weekly candle that's moved this much. Yes, we have the flash crash and things like that have moved it to the downside this large. But if you look at the last big bullish move, we've got some blue candles in there, some big blue candles, but nothing like last week, nothing that measures the same. So it's been actually almost a decade, a little bit over a decade since the last time we saw this big bullish of a candle. So that's what I'm saying stay away from these pairs. I mean, if you are already in buys on these pairs from last week, definitely have your, let them ride out, but have your stop losses set to break even or in profits. But overall, I do think that there are some targets to the upside, at least 100 pips more on either one before they start to go down. I'm closing it before more greed sets in. Yeah, no, not a bad move. 1,000 pips is not a bad payday, really, no matter what lot size you used. So anyways, we're just going to skip over the pound pairs. Not interested in those. Like I said, my main focus right now is I'm looking to see what Euro USD does. I will tell you guys, if Euro USD comes up, and let me unlock this really quickly. And if we do see it come back, I'm going to relock that. If we do see Euro USD somehow make some moves this week to the upside, and we do come back above this trend line, then look for a bounce and then look for higher highs. Definitely let's take advantage of a weaker dollar all the way around. But that's kind of going to be my main focus. And then USD Jappy, okay? Dollar yen, I am still biased to long-term weakness, okay? Just as I am, higher highs on Euro USD at some point. We are currently coming back to test the underside of this wedge that pound yen or dollar yen broke out of. So we may come up to this area before we see it falling. I talked about this in the premium group, one of the webinars last week, is that we did have this nice, I know a lot of people were looking to sell in this area. We did not sell because, I've been in the markets for a long time, guys, and I've just seen this happen, and sure enough, it did happen. So we saw this perfect, what some people might call a perfect trend line, and it did look perfect. We saw it start to kind of slow down in this area, and we saw a lot of sellers pick up in this area, but then we saw the news that was good for the dollar. All right. And that forced this pair all the way up and definitely took out the stop losses of sellers in this area. It actually came back down to this trend line. pretty, clean price action. We saw this 4-hour candle bounce right off this trend line and then continue moving higher on the strong dollar news last week. Last Friday, we also had strong dollar news. So I do think that long term, I am still biased to it falling. Okay, I think as the dollar continues to weaken, there's going to be, a weak dollar is a stronger yen, so that puts pressure on this pair to the downside with a strengthening yen, and then also just a weaker dollar in general puts pressure on this to the downside. So I think that we could be coming up maybe another like 30, 40, 50 pips or so before dropping. But what I would be looking for personally, guys, I'm not really worried about this area up here because it could go one of two ways. I could be wrong. It could pop up here and then continue moving higher, or we could see a lot of consolidation in this area. So what I'd like to see is this trend line actually price come back below this trend line at some point, however it decides to do that, make some sort of bounce or bear flag, and then look to sell for this nice, this little 200 pip drop in this area. And then, of course, we're looking for lower lows from there. I think USD Jappy still has the potential long-term on a weaker dollar to break the 108.50 level and keep going, back maybe down to this trend line, the 105 area, the 104 area. So still watch for long-term weakness on dollar yen. But again, it might be one of those weeks, guys, where things kind of consolidate a little bit, waiting for the dollar news on Wednesday. And then once we see, definitely I'll let you guys know, I'll tell you right now, Wednesday, there will be some big moves in the market. So you're going to see more than likely a big push to one side or a big push to the other side. So that will be the catalyst. Let me just check the chat. Just some of you guys chatting around with your trades. Good job, guys. Okay, AUD USD. We are in consolidative mode with both of these pairs, with AUD USD and NZD USD. Now, I do think on a weaker dollar, this pair will continue to go up. You can see how it has been wedged in between these two lines last week. So just to give some of you guys that are new a little rundown on my trend lines, as you guys can see, my trend lines are on the daily and the 4-hour, so they really don't get moved that often. So as long as you kind of get them done, down once, then you kind of have a good idea of the trend line in general. But this is a very clean support trend line on the daily, makes a whole lot of sense. And then we have this trend line right here. This trend line goes all the way back to 2013. It is a very, very large trend line, so it is a very significant level. And you can see if we zoom in, I'll zoom in a little bit. We zoom in and see last week, we broke out of the trend line, came back down, and then we just saw a lot of consolidation in here. So my prediction is that there is going to be some sort of, it's kind of like a spring, right? If you kind of like hold a spring, the further you push the spring in, the more tension it's going to have to pop. So the smaller the spring gets, the more likely it is to have a big move to either the downside or to the upside. Now, of course, it's pretty technical at this point and pretty much based on which side it breaks out. But if we do see, based on what happens with the dollar, if we do see a strengthening dollar, then most likely this breakout is going to be to the downside. And if we see a weakening dollar, this break is most likely going to go to the upside. I am very aware. I do see this from Friday, guys. I do see this exhaustion candle from Fridays, but I'll tell you guys a little secret about the price action on the daily candle. I don't weight my opinions super heavily on price action on what happens with the Friday candle, because Fridays can be very wacky. A lot of institutional traders are closing their positions, which causes the markets to what I kind of call like fake moves in the markets. So even though this is an exhaustion candle and it definitely points to some downside, this could just be a fake move in the market or a fake price action, and we could see this going up. I really am confident when I see the price action on daily candles that are formed on a Tuesday close or a Wednesday close or a Thursday close, because that's when the most of the volume is in the market, and you get to have a good idea of what's going on. You don't have as many fake outs like you would like a Sunday candle, or even the Sundays aren't that bad, but the Friday candles in particular, I don't like judging my trades just based off of the way the Friday candle closed. All right. And so, okay, my bias, of course, like I said, kind of like Euro USD. I think it's going to continue moving up higher. I think that it is going to see a breakout to the top side, but I don't want to buy down here, guys. I am looking to buy when it breaks this weekly resistance, bounces off of this area. So this would be a good level to buy at. Once it breaks this area, once it breaks this resistance and comes back down and not just retests the resistance, which is now going to be support, but also comes to retest this trend line. This would be a very good area to be buying, looking for buying signals, and then looking for it to go up higher. So that's AUD USD, New Zealand dollar, US dollar. Also the same thing, kind of on the sidelines right now. I've made the recommendation for, I think, almost the past 2 weeks to not take any trades on this pair, just because the consolidation has been pretty crazy. I am biased to the upside now that we are back above this trend line. Okay, we are back above this trend line, but just like Australian dollar, US dollar, if you guys are not familiar with these two pairs have a heavily strong correlation to each other. So, or a very strong correlation to each other, a positive correlation at that. So generally speaking, this isn't all the time, and this is with most correlations, guys. It doesn't happen all the time, except for the dollar index and the euro dollar. But for New Zealand dollar, US dollar, and Australian dollar, US dollar, those two pairs, they have a very strong positive correlation. So for the most of the time, you're going to see when one goes up, the other goes up. Not all the time. There are times one goes up, the other goes down. It's going to happen, guys. But this is just a general positive correlation. If you aren't familiar with your geography on the maps, obviously you guys that are in New Zealand and Australia know about it. But New Zealand is that country just right off the east coast of Australia, that little tiny sliver country right off of the east coast of Australia. So obviously it's the nearest country to it, so it's going to rely heavily on it for its economy, for its trade, its imports and exports, and things like that. So that's going to have a big. That's why they have such major confluence to each other, is because their economies, or at least New Zealand's economy, has such a relies so heavily on the Australian dollar, or Australia's economy. So same thing with AUD USD. I'd wait for it to break this resistance level, bounce off of here, and continue moving up higher, just like the Australian dollar, US dollar. But both of these pairs, I'm looking for more upside on throughout the week. Let's look at USD CAD, guys. USD CAD is quite interesting, okay? On the daily, let's hold on. I'm going to hide. Actually, I'll just delete this. I'll redraw that so you guys can see. That's a 4-hour trend line. But on the daily, price action has been pretty clean with USD CAD. I did mention on Thursday going into Friday that there was a potential for possibly selling this pair. Actually, in the premium group, we did take a sell on this pair. We ended up closing our trade in profits. Okay, this was, I think our target was somewhere, first take profit was somewhere around here, this bottom red line, and then our second take profit was at touching our previous lows. It did not get to our take profit, but I did make a recommendation to officially close this trade in the premium group on the trade copier as well. We locked in some profits on this trade just because we saw not a whole lot of drawdown, and it went into profit more than it went into drawdown. So it was appropriate to close, but ended up not going in our favor, which is okay because we were out of the trade. But it is just consolidating right now. It looks like it's entering the consolidation phase a little bit, but it's got some very beautiful and clean price action on USD CAD. It is sticking below, even without, just to show you guys, even without this fib level, it makes a whole lot of sense. We've got some nice resistance in this area. On the 4-hour, it looks really nice too. You can see we have this little bit of a flag area and then this resistance, and which is actually also funny too, because when it did drop, when it did break this area, just to show you guys, when it made this pullback for a while, and then we started to go bearish on it. I've been bearish on USD CAD, just for some of you guys that are new in here. I've been calling USD CAD shorts ever since this happened. You guys can go watch 1, 2, 3, 4, 5, 6 weekly webinars ago. They're all on YouTube if you want to fact check me or anything. But I did say, when this week opened right here 5 weeks ago, I did say, let's look for sells on USD CAD. Very, very clear sell signal on the weekly right here. So lots of pips have been made on that. We've taken a couple trades that have all gone into profit on USD CAD since then. But what I was going to point out is the extension of this retracement is actually also our current resistance. So we have our extension level as current resistance. And then we also have, if we go the other way with that, if we go with the current retracement, we are at the 23.6% retracement. So 2 very nice fib levels, but more than that, right? Because I like to actually deal with price action, what's on the actual charts. Above both of those, we have this support, which again, I'll just show you guys. So that support makes sense. That was actually our target when we were looking at selling USD CAD. That support was found right above the bullish flag, or right below the bearish flag. So that being said, we have some nice support, which is now acting as resistance. If we break this area, then if we do see a bounce in this area, then it may be making a little bit more of a pullback up to 124. But ultimately, I am still biased to the downside on USD CAD, and I will show you guys why. Let me drop a little bit, and we can see here is this is the weekly time frame. Okay, this is why I'm giving you guys a look at why long term I think USD CAD is still going to drop, is because there is this big descent in USD CAD. Okay, we've measured it out before. It's about 2,000 pips, and then for over a year, about a year and a half, we saw some massive consolidation inside this channel on USD CAD. We took lots of trades in here. We traded this channel quite well over the past year, but we did see just about a month ago, we saw price, a little bit more than a month ago actually, we saw price break this channel to the downside. So I predict that this drop here is going to equal the same length of this drop. So that being said, I still think that there is a couple hundred more pips at very minimum for this pair to drop before it continues, going any higher long term. We also have on the daily, you can see a very nice bear flag. Nice bear flag. Oops, used a little thick one on that one. We have a bear flag there. So long-term trading something like this, either we're going to see this continue to pull back before going lower, but if it decides to respect this resistance in the daily, we don't see a daily candle close above this week, and we do start to see some more downside, definitely mark off your support. All right, I just haven't marked it off because we aren't at that point yet, but obviously I would. So mark off our lows, which is right here. Okay. And then look for support to break. And then once that support breaks, look for some sort of, you want a confirmation of a bearish continuation, because you don't know, is this a fake out? Is it just going to pop back up and then it's going to fake everybody out that sells too early down here? That's what can happen sometimes. Sometimes you aren't going to see that. Sometimes it's going to go like this. It's going to move straight down. So, but the nice thing about Forex is that if you miss these sort of setups, there's always going to be another one. There's always setups to go. So, don't let your emotions get the best of you when if you don't get the retest that you want. But actually in this case, we did get the retest. It kind of broke this resistance level, retested, and then continued going down. So you're looking for something like that. You're looking for it to break this level, do some sort of retest, and then go down. Sometimes you aren't always going to get that retest. Sometimes you're just going to get some tight consolidation that doesn't necessarily retest that resistance before dropping further. But bearish flags and bullish flags, those are probably my two favorite patterns to trade. They make me a lot of money. They make our group a lot of money because A, they're a simple trade, or they're a simple setup to trade, and B, they have a very high win rate. Bull flags and bear flags on the higher time frames, like the 4-hour and the daily, have a very high win rate. And that's a majority of our trades is bullish and bearish flags. Other times we will use limit orders, to catch retests and things like that. But for the most of the time we do use, buy stops and sell stops to catch the breakouts. And that's my favorite style of trading right now. So I hope this was clear enough for you guys. I know we kind of went all over the place. If you guys are new to Forex, if this is your very first webinar, I will tell you guys there are some great places you can learn resources for free. I myself, in our premium group, I'm actually releasing a 20 lesson. It's going to be 11 beginner lessons and 9 advanced lessons, which if you want to go above and beyond and learn that and be a part of the group to learn Forex that way, you definitely can. But there are lots of free resources online. Babypips.com is a great place to learn. It teaches all the basics. I'm not going to tell you that Baby Pips is going to teach you how to trade and that you're going to become some master trader by going through Baby Pips, but it's just babypips.com, guys, just like it sounds. And then you click on the school tab and you can learn Forex for free through there. But it does give you a nice exposure to the basics. And then from there, you should have a general understanding. And then you can go on to more advanced learnings, read some books. There's a lot of books like Naked Forex out there. Lots of good stuff. Lots of people are saying that in the chat, there's a lot of people saying Baby Pips is good. So, yeah, guys, you use Baby Pips, and then go on to more advanced learning. We have some free books. If you make a free account on our website, there's actually our Dropbox that is completely free as well. And there's some ebooks that you can download and read as well in there. But other than that, guys, that's really all that I have today. I will go ahead and upload this for you guys, but I do want to take 2 seconds. And if you guys are brand new, if this is your first webinar, trust me, some of you guys that have watched this, or especially in the premium group, I go over this quite a bit, so you don't necessarily have to watch this. But if you guys are brand new and this is your first couple, this is your first exposure to Forex, I want you guys to just take 2 seconds. I'm going to take, or 2 minutes. I'm going to take 2 minutes and just show you guys something, okay? So I want to show you how you can be profitable in Forex without having to win all of the time. Okay, let's do it very quickly. We're gonna take 10 trades. Okay, this is the sauce, guys. This is the secret. All right, if you guys are new to trading and you're trying to figure out what is the secret to trading, how can I be profitable with trading? This is how, guys. So stay tuned. Okay, here we go. We're taking 10 trades. Okay, now let's say on every single one of those trades, or the average of those 10 trades, we should say, is you had a 1 to 2 risk reward, meaning that you would always aim to make double what you risk. So let's just say you risk 2% to make 4%. Okay, and that's appropriate. Okay, all these guys that are online saying, risk 10% of your account, 20% of your account, don't be going crazy. Don't risk anything like that, especially when you're new. 2% of your account for 4% gain. All right, 5 winning trades. Let's just use this example. 5 winning trades and 5 losing trades. So you have 5 wins and 5 losses, okay? Now, using the same principle, using this key. This is the key right here, guys. This is why I said earlier when we were looking at the Euro USD trade that I gave out in the premium group, why it's very important to average a 1 to 2 risk reward. Because if you have 5 wins and all of them win at least 4%, then you now have a positive gross plus 20% gain. Same principle, 5 losses. That means you cut your losses at 2% loss every single time, no excuses. Now you have negative 10%. Okay, now overall, what is that? Simple math, guys. You still have a net positive 10% gain. So let that sink in for a second, guys. Let that really sink in, that you'd only won 50% of your trades. But because you used good risk management and you made sure that all the trades you took had a good risk reward, you're still sitting at a 10% profit. And that's just on 10 trades. So let's take this principle for a second, guys. Bear with me, stay with me, guys. This is the good part. This is the juicy part. Is that if you can consistently make that 10% a month, let's go to compound calculator. And you have this 10%, so 10% per month, right? And let's just say you start with $1,000. All right, basic investment, right? Not hard to come up with if you're serious about investing. I'll show 500 after this too. And you do this for 5 years. Okay. And that's one thing that you guys have to understand. Like going into Forex, you got to know that you aren't going to get rich in a couple months. You got to know, like I talk about that enough. Like you got to know that it is a long-term investment, anything long-term, but it beats working the same job for 40 years, right? It beats having your money in an IRA or a 401k for 30, 40 years, right? So 5 years, that's it. We all know someone that's been doing the same thing for 5 years, still making the same amount of money. So if you can make that 10% a month consistently. Now, keep in mind, this is an average, guys, okay? So it doesn't always mean 10% every single month. It means the average. So in a year, if your account gains 120%, well, you might not have had 10% every month. You might have had, 20% one month, 30% another month, 12% another month, 5% another month. But as long as those 12 months average out to about 120%, that gives you 10% per month. So, make sure that you guys are, keeping an open mind with this stuff. It's not always, because I'm not going to lie to you guys, you are not going to hit 10% every single month. You're going to have your months where you make no percent. You're even going to have your months where you lose a little bit. But overall, as long as you have that good risk reward that we just talked about, you're always going to be profiting. Okay, so let's calculate this. That is, so starting with $1,000 at 10% a month for 5 years, you now have $304,481.64 that you started with $1,000 5 years ago. And you didn't look to flip your account. You didn't use bad risk management. You used good risk management. So this is the reality of Forex, guys, that if you want to be successful, you have to change that mindset from, okay, how many pips can I catch this week? I need to make 10 pips every single day. Stop focusing on the pips, guys. Stop focusing on the pips. Focus on the percentage and the risk rewards of your trades, and you'll see a huge, huge difference. Your like a whole light bulb will go off in your head. But let's just go one step crazier. Let's do this for 10 years. That is $92 million. $709,068.82, guys. Okay. Even if you made, I always say this, even if you only made 10% of that and you made $9 million in 10 years off of $1,000, I think every single person watching this can agree that that is more than worth the wait, more than, this is a life-changing amount of money, guys. This is the reason you guys are all here. You guys are in Forex, and other people out there aren't going to be this honest and straightforward with you guys. They're going to tell you, oh, I can make you 100% this month, and yes, I'm not going to lie, flipping accounts, you can do it for a month, right? You can turn $100 to $1,000 in a month. That's totally fine. I know people that have done it, but can you do that consistently every single month using low risk? No, not at all. So if you want to see that real wealth factor of Forex, then you have to change your mindset and go for that 10% a month, risk that 2% on each trade for that 4% or more. That Euro USD trade, matter of fact, I'm not going to go back to it, but because I deleted it, but it shows it was like a 2.22. So that would have actually been like a 4.4% gain. So, you just want to have that good risk reward. But I'm done boring you guys to death. You have our trades for the week. Let's look and see what USD CAD does. That's definitely in my eyes. Definitely looking to see if AUD USD and NZD USD can break this resistance levels, and if so, get a bounce off that. Look to the upside. Euro USD. I am still biased to the upside, so I'm not really interested in selling this pair. I'm just going to kind of see what happens. But based on the daily, based on the weekly, things like that, I think that we are still looking into a higher Euro USD over the next coming weeks. And it all really depends on how the day, I really start to decide how I'm going to trade the rest of the week based on the way the daily candle closes on Sunday and the daily candle on Monday closes going into Tuesday. If the daily candle closes very strong or very positive for my bias that I had on Sunday, then I like to do trading on Monday. If I don't see anything that supports my bias and it goes completely opposite based on the Sunday daily candle close, then I wait for the Monday daily candle close, guys. It's about letting the setups come to you and being patient in between trades. So I think you guys got where I'm coming from, that low risk, compounding growth over time. But again, if you have any questions, if you get some value out of this, please, or if you have any questions, message me. If you get any value out of this, leave a review on our Facebook page, keep in our Telegram with us, keep watching these. If you have questions, feel free to visit our website. We do have a website. It's called positivetraders.us. It's not .com. It's positivetraders.us. You can go on here and you can learn a little bit more about what we do and check out everything. But any questions, feel free to message me. Other than that, guys, have a safe trading week. Keep that risk management in line so you can see that long-term growth that we were discussing. And have a great rest of your week, guys. And see you guys later.